Welcome. So in today's video, based on the title, I'm going to go over pretty much a pretty common question that I get as far as for selling or just selling and making like re-entries or waiting. So it's just kind of I'm going to give you my 2 cents on as far as for trying to time the market. And if you follow my channel, you know that I'm pretty much against it, but I'm going to weigh in on that and give you my 2 cents. So um, let's see here. I'm going to start with the chat. Can you hear me? Let's start with that. I'll make sure everyone can hear me before I get started and make sure I'm not crazy talking to myself. Okay, perfect. So I'm going to answer that question as far as for selling and all that kind of stuff, and then I'll take some questions and we'll go from there. I'll stay on for about an hour if you guys have questions, and then we'll call it a night. Sound good? Okay. So when it comes down to selling and holding, the primary thing is we're going to have to evaluate it on a case by case situation, and because everyone's timing is not the same, and I think that the biggest issue we have here is a lot of phrases and pretty much like I guess investment advice kind of gets pushed out overall in the market, like diamond hands and buy the dip and hodl and stuff like that. And I think that what you can never ignore is that everyone's situation is different. Everyone's timing is different. Everyone has different things going on. Some people are over leveraged. Some people will need to extract money for personal reasons or because an emergency popped up and stuff like that. So, and the best thing you can do overall, in my opinion, is kind of like plan for that and simply just not over leverage yourself. But no, he said we selling. No, not. I saw that comment pop up. Not selling. I'm not selling. But what I'm saying is, it's a common question that we get. That I get, pretty much trying to time the market. They're like, oh, because of all these catalysts here, and we see that there's a potential here for a greater dip. Should we just sell now and then just buy back in later and have a lower DCA, and pretty much try and time the market here and be able to make greater profits. And that it can work, but you're going to have to factor in the losses and at what point you'll actually start making profits. And it's just very risky. And there's a very common philosophy about that, about trying to time the market versus time in the market. And normally you end up getting killed if you try to do something like that. What we have to, especially now, we have a few more dates coming up here as far as for like with the Feds, because again, Jerome, he was tap dancing and moonwalking around those interest rates. So we really know, the only thing that we know now, the only thing that the Fed meeting did was confirm what we already knew. Because he didn't give any concrete information as far as for how many rate hikes or to what level of aggressiveness. He just said that inflation compared to last month is worse this month, and it's still a runaway train. And we're still going to have supply restriction issues probably until 2023. That's all we know, which is all negative catalysts saying that, oh, okay, well, this is probably going to hint at more aggressiveness. So, so that's pretty much all we know. So trying to time the market here and say that, oh, well, we know these negative catalysts here, we can possibly sell now and buy in at a later time and get better rates. You can't, nothing is for certain, right? We've seen this. You said March 16th will tell the story. That's exactly right. We've seen this. Let's take a look here. I'm going to show you on the S&P, because the Fed has done this before. They've said that they were more hawkish, and they said that they were going to raise interest rates, and cut back on spending. And the market started doing what we have now, which is tanking. And they got scared because we were headed toward a recession fast. And so they pretty much retracted their statement. This happened in 2018. This is before Corona and none of this type of stuff. This was simply fear that injections were going to happen. No, excuse me, the rejections are going to be restricted, and interest rates were going to be hiked. That's where this sell-off happened here. And if you watched my video last night, you know what we went over as far as for the 21-day and the 50-day moving average crossing. We typically have, that's typically an indicator, it's based off of the current price action for sure. But when we start having them head toward each other, you can kind of get an idea. So, and we have, well, I'll get into that in a moment, but technically, yeah. So this is the fear that we had here. They retracted and we rallied and we started going back up, of course, still getting that money, not to the aggressiveness after the pandemic, but we still got the injections, then raised the interest rates. And of course, we had the correction here. They hiked up the QE to around $120 billion a month. And then we're just rallying up here. So it's possible, but because we have the threat of inflation, inflation was not a runaway train back in 2018. Because we have inflation now, I don't believe we have the room for them to retract. So this is why I say don't try and time the market here, stuff like that. And it's better overall at the end of the day. Especially if you're not over leveraged, you don't have any type of family emergency coming up and stuff like that. If you're not over leveraged, coin count will be sufficient, right? At the end of the day, if your spread is from, let's say the goal is $1, right? If a spread from 15 cents to $1 or 20 cents to $1, yeah, the 15 cents is more profitable, but it's the 20 cents to $1 still better than 0 coins to $1 because you're not going to be able to participate because you didn't buy anything. And that's typically what happens when you try and time the market. Ask the people that were waiting on Dogecoin to go back to 5 cents from 10. But we have to look at the catalyst here and kind of get an idea for what's going forward. And for those of you who didn't check on the video from last night, this is one of the, I'm going to try and zoom in here. This is the indicators that I was speaking of. Hopefully you guys can see this better. But typically when we start having these bends, and you can see it here as well, we start having these bends and this 21-day and 50-day start crossing. That's typically, you'll see an aggressive dip. And what we have here is this 21-day, we have a very sharp bend. So again, nothing is 100%, but based off of the catalysts that we know are coming, it's likely that we can have this cross here and can expect a further pullback. This is why I said in my video last night, if you have the ability, get some, save some cash up and prepare to, especially if you're long, it's what I'm doing, as far as preparing to, increase coin count and get some better entries. And not just on Dogecoin, a Bitcoin, Ethereum, ADA, a lot of the coins that I'm bullish on, I prefer to have better entry and higher coin counts. Like I said in my last live that I want Bitcoin to be $100 and Dogecoin to go to a penny. Like people will be like, oh my God, that sucks. It's going to be financial ruin and stuff like that. But, in the short term, it's even in the long term, I believe these coins will appreciate. So it's not that I'm a bear. I'm not, I would love for the market theoretically to go up, every year, every month, forever. That would make everything easy. But I'm not a bear, but I recognize that there's more opportunity in a bear market with less risk in a bear market, as far as if you know how to identify companies of value, competitive advantages, utility, and stuff like that, then you can make a lot of money on the next bull run. Bull runs, bear cycles, they are like seasons. They follow one another. After summer comes winter, after winter comes summer. Like I'm telling you, so you have these corrections. Corrections are healthy for a natural, well, I said natural because there's obviously some manipulation going on here, but corrections are healthy for market resets and longevity. People invest with the intentions of taking profit at some point. So whether that be to a point of their designated time or fear. So, and I view these as opportunities for people to get in on like some 2018 prices, 2019 prices, because Apple is doing phenomenal. But if I can catch some of these companies at some prices that they were at a year ago, and I know that they have the ability to appreciate, why not? So I'm gonna look at some of these comments here. Let's see. So I have a small amount of Doge, around 5,000, but I can't average down because I got in at 6 cents. Should I try to get more, even if I'll be averaging up? I know your pain, man. I know your pain. I posted in the community section like my first entries in the Dogecoin. So while I have many accounts, technically speaking, anything that I buy would be averaging up. And this, I'm not sure if you were on, but this alludes to the point that I made about coin count. If you're long, and this doesn't just apply to Dogecoin, but if you're long, a spread from 15 cents to $1 is still better than being zero, right? So, especially for those of us that have really low DCAs, we can't get too caught up in that and act like there's not money between 15 cents and $1, or 20 cents and $1. And $1 is just an example, but you get what I'm saying? So if your DCA is really low, don't get caught up in it too much, especially at these prices when you see this breaking resistance levels and being able to get them at historical lows. Especially if we can get some possibly with this information from like the Fed, if it comes down and tests like that 12 cents level again, you may be able to get some down there. I consider that a win. So, just decide if you're long term or not. And if you are, just remember that coin count in the long term, coin count is what's going to matter the most, right? Coin count is your multiplier. So the DCA is pretty when it's at 6 cents and stuff like that. And I know how it feels saying that, oh, no matter what happens, I'm still in the green. Even if it goes down, 80% or whatever, I'm still in the green. I can withstand the cycle. But if you're long term, just keep in mind coin count is your multiplier. What month is the moon landing? I can't find much information on it. I hear everyone saying 2022, but where's the source for 2022? I said I was going to confirm it because I know there's a lot of stuff coming out saying that it was October 1st and all this kind of stuff like that. I personally haven't seen confirmation for that. When I was doing research on it last year, everything that I saw pointed to March of 2022. But we'll get some concrete information. I'll put it in my notes because I said I was going to look it up and to try and confirm it, but I haven't. So let me put this in my notes here. And I will do my best to try and find something concrete from a reliable source, and I'll post it in the community section. But everything that I saw prior to this news of like an October launch and stuff like that, it hinted at March 2022. So we'll kind of have to see and go from there. Have you checked on the Ethereum Classic following Dogecoin? Just wanted an update on it. Yeah, I did look at it further, and because I know that a lot of coins, especially that influx of money and that peak at around like May, June of last year, a lot of coins followed it. But just Ethereum Classic wasn't one of the ones that that I literally did like a chart overlay to do a comparison. And there's some small divergences, but I'm very interested to see because it's actually following it pretty closely when I did the overlay. I'm very interested to see if it's going to have that breakdown there because I believe that Ethereum Classic, especially in the next bull run, will appreciate again. Because I think that because of Ethereum so expensive, Ethereum Classic is kind of like a cheaper way for them to have exposure to Ethereum. So I think that it's actually a great entry. Let me take a look at it here. But I like the fact that it's following it. I'm very curious to see if that's going to continue. ETCB. Let's do a 1 year chart. I'm very curious to see if that's going to continue after like the Fed meeting and stuff like that in March. But we're right above. There's still room for consolidation. There's some weak support here at around like $20. But the fact that it caught itself in the middle of this gap up and started trending sideways, that's actually really bullish. But it is dipped below all of its current moving averages as well. So that does indicate that it can be a further correction, possibly down to this next support level around like 19, 20 bucks. But the fact that it's building support here when there wasn't any previous is very bullish. So I do think that Ethereum, again, its exposure, especially as the regular Ethereum, not 2.0, appreciates. People will invest in here just so they can have exposure. So I don't believe that we've seen the best of Ethereum to come. And the fact that the moving averages and stuff like that, it's held a line retracing Dogecoin, I believe we can expect a rally out of this in the next bull run. So I'm excited about Ethereum Classic. Well, this guy almost gives the best note, almost, but not financial. I appreciate you. Thank you. Get the like up. I appreciate you guys. Yes, let me like the video if you haven't yet. Let's see here. Let's see. I'm having trouble averaging down. My average stays the same. I have a video on my channel that it goes over at DCA and how to properly do it. I have to know your numbers, but more than likely, either you're trying to average down too closely to your current average, or you're not using enough money based off of your current position. Because what happens is, let's say if your current DCA is like 18 cents and you have $10,000 in there, and you say, oh, I have an extra $500 and Dogecoin is now 15 cents. I'm going to throw this 500 in there and average down. Like, it's going to bring it down, but it's going to be like decimals points. So you're not even going to see it because the spread is too thin and it's not enough money. I go over some percentages and stuff like that, and I have a average down calculator and all that kind of stuff like that. The video's on my homepage. It's in a playlist called "If You're New to Dogecoin, Watch These," and I go over cycles and how to average down and stuff like that. So I think that it will help you with that. So it just really depends on your numbers, but I think that video will be useless. Let's see, a bunch of FUD about the rocket. It hasn't changed. There's no date. And if Elon was smart, I wouldn't put a date post Tesla acceptance. Smart. Yeah, that's why I say I haven't confirmed anything yet. So I've seen the information about the October stuff like that. A lot of times people came asking, but I haven't seen anything. So to confirm that yet. So that's why if I don't know, I'll typically say, I don't know. I watched the live with Matt Wallace on Final Stand, and he had a countdown on the SpaceX Doge One launch, and it said October 2022, but I can't find it myself. Yeah, a lot of people sent me that. I haven't seen it. I don't know where it is, but that's why I said I'm not going to try and put something definite on it until I actually see it. But even when I was doing like my Google searches and stuff like that, it said March, but I haven't seen like official thing from like Elon or SpaceX or anything like that. So until then, I'll just say I haven't found anything concrete as of yet. How much Doge should we hold? That's a personal choice. I want to say that first. In my opinion, I think that as far as whatever your target is, because again, everybody's target is going to be different. As far as like what you're targeting, let's say your target is like $1. I would say, especially if you're considering yourself long-term in investing, or this is like a field that you want to use to change your life and build wealth for your family, I would say no less than like a year of your income at your target rate. So, give yourself that time, because that's ultimately what the best measurement of wealth is anyway, is time, free time, your freedom. You have like your freedom number and stuff like that. So I would say, whatever a year and a half, whatever that time frame you would need to build up your safety net, or so that you can work on other things and literally liberate yourself, whatever that number is, with your target, decide on it based off of that, because ultimately that's what you're going to really need, and if you can, build some cushion in there as well. Because a lot of times what happens is people get, especially in the bull market, they'll get, really like gung-ho and be like, oh my God, I made 50,000 in this one play. And if I put this 50,000 in this next play, I'm going to turn that into $500,000. And, and then, that's why I say like the house never loses, because even if you win, they'll end up getting it back. So you just got to be careful with that and have your numbers. And I'd say just have like a year and a half, maybe 2 years of your actual income. So to actually liberate yourself so that you can build. Because I think that most people will be, because I think that you can properly study the market. Because I learned a lot more when I didn't have the pressure of, working and, reporting to like a job and stuff like that. So I think that once you have that pressure off of your back and you're able to properly focus on the market and literally liberate yourself from like the daily grind, you'll become a more proficient investor and you'll be able to build from there. So I think that is bare minimum, have a number that you can liberate yourself and build from. So the institutions pretty much control the price of Doge, and we're retail along for the ride. Institutions control the price of all of the markets. Granted, this is the highest number of retail investors in the history of the market, but you have to understand that historically, retailers, it was considered that we were too dumb to invest in the market. So what we would do is we'd hire brokerages or hedge funds and we'd give our money to them and we'd say, hey, go invest our money for us. And they'd say, hey, we're going to give you, 10% a year or whatever, and we'll take our management fee and all that kind of stuff like that. And they'd hold on to our money, day trade it, pump and dump stocks, squeezes and all that kind of stuff and make, 1,000% and give us 10. And we were like, hey, we're winning 10%. And they're like, yeah, just give us all your money every month. And, in 30, 35 years, come back and see us again, and we'll make sure you have some appreciation. Meantime, they'll hand you, $500,000, $1 million, $2 million or whatnot, and they've made millions of dollars off of your money. So historically, that has been the case. And that's one of the reasons why, like if you think about it, the net worth of the stock market roughly is around 100 trillion, right? And if you need further evidence, look at what we've seen in the past 12 months with crypto, especially with institutional favorite Bitcoin. We've seen $1 trillion vanish out of Bitcoin in within 48 hours. We've seen $500 billion vanish out of Bitcoin within 48 hours. Now, unless there's some secret group of retailers, like some text message group of tens of thousands of people, and they're like, hey, tomorrow at 3 a.m., let's all take our money out of Bitcoin, or let's all buy back in, then I'm going to have to be forced to say that that's a few individuals with a lot of money. And by individuals, I mean, I'm going to say either really wealthy whales or institutions. So at this point, what we're doing is people, I believe we're in a cycle as far as people learning about the market, how the market works. And a lot of the algorithms are going to have to be changed because of us. And I believe we've already started to change some, even based off of the bear market that we just came off of even last year, which is the shortest one in history. Because the institutions are going to be forced to kind of change their current cycles and algorithms because of the amount of people that are involved. They're not going to, let's say crash a Bitcoin or something like that and leave it there for 2 years, like what's happened in the past, or 8 months, like what's happened in the past, and lose control of the asset and just be like, oh, okay, well, retailers are in the market. They're on a running frenzy. Let's take 90% out of Bitcoin and crash it, down to nothing, and then pick it up when we're ready to diversify again. Because at that point, they probably lose control of the asset because retail will be buying it like crazy. So a lot of these trends, we're kind of gonna have to see how they play out, because I do believe a lot of history and trends that we have over the next, that we've based a lot of the predictions on and stuff like that, they're going to break this year. But for the most part, until we get enough people in or enough money, we are kind of along for the ride. And that's why it just becomes better when you're proficient with cycles and knowing how to invest in these cycles and stuff like that, and when to take profits and knowing your numbers. So that you're not getting manipulated and pump and dump, because it's nothing for institutions to attract people into the market and pull the floor from underneath them and then buy back in. It's nothing. So You know, that's where we have like these cycles and stuff like that. And I'll be releasing, I'm giving out like a free guide and stuff. So that way you guys don't have to search through all of my videos. And it has like I'll have like links to different videos and stuff like that. And it'll have my top 5 like crypto laws and stuff like that. So I think that will kind of help everyone. What if you have no income? Well, if you're already in and you have no income, and you're in the red, I'll say hold on. You know, unless it's like really an emergency or you're really over leveraged, I wouldn't take that kind of L, especially if you don't have the ability to average down. I'm assuming that's the question you're referring to. Yeah, but yeah, I wouldn't take that kind of whipping if I didn't have to. So if you have no income, I say hold on. Yeah, like literally hold on for dear life, and pray that they're going to have kind of, I guess, become more agile with these rate hikes. Because as of right now, you know, Bank of America is predicting 7 this year, and they're, you know, even today, like a lot of information came out where the institutions are turning from like pretty much post-pandemic care to, okay, let's deal with inflation. So, you know, definitely hold on. You know, don't take, depending on how far you're in the red. So you're very well spoken, and I can see you're giving a true knowledge of what you believe. Bro, y'all gotta like and subscribe to this man, giving real knowledge about all the hype. I appreciate you. Thank you. Let's see, do you have a price target for Doge years from now? As of right now, I have it set. Normally I do, and this is actually me violating like my principles, but because of what we're pushing for Doge to become, I look at it as for more. Say Doge is crashing right now. Let's see, but because of what I look for Doge to become, I'm more so very curious to, you know, be on this ride, because I'm more so concerned with like the utility and the massive expansions that we have. You know, whether or not, you know, like the McDonald's catalyst, you know, can we get a Walmart? Like, is this going to be like the largest currency revolution led by the people? Like, so I haven't set like a term or exit on it, because when you have like these type of catalysts going out there and we're actually growing and making progress toward that, it's really hard to put a number on it. It's really hard to put a number on it. So I haven't put a number on like an exit or anything like that for Dogecoin just yet, or to even take profit. So yeah, I see Doge is down, was it 14.14? Let's see. BTC, I just want to check some things here. Yeah, they're all taking their infamous nosedive simultaneously. So yeah, and I think that even if you look at certain charts, they'll turn it red and you kind of put like fear and stuff like that. But again, we bounce off of that 12 cents resistance level pretty strongly. So until we get like unless Jerome Powell comes out in March and says, yep, inflation's out of control. We're going to do 5 rate hikes this year, probably 0.5% each. We got to get this, like it's pandemonium out here, and we're threatening hyperinflation, double-digit inflation. If we don't, we're going to have, like, unless that happens, then that 12 cents line should hold up. But I gave you the numbers for like the 0.6, and I believe like buying pressure just on retail would kind of pump the brakes on it around the 8 to 10 range. But I think that despite these corrections and stuff here, I think those should hold up for now. And I already gave my price targets for Bitcoin as well, in the event we have an aggressive sell-off. This is what I was responding to. The Doge is dropping right now. Let's see. We have several major catalyst events this year. If your goal is just to make profit, but if you believe in the use cases, you need to be in a 2 to 3 year hold mindset. That is a fact. That is a fact. Yeah, and if you haven't, I know it's common. I know it's popular to pretty much have like a trader's mindset, but normally you gain more value from buying and holding and trying to, especially now with what's going on in the markets and what we know is going on. If you don't have like experience trading, you're going to come out better holding and averaging down. Especially when it comes down to like shorting the market and doing puts. Like if you don't know, the simplest thing that has been proven over time is to buy and hold, right? That's been proven over time. And it's okay for something to be going on in the market. Like, oh my God, people are making a killing over here and they're shorting and they're doing puts. And I heard about inverse stocks. That's okay. And it's okay to admit, okay, I don't know anything about these. Let me not go all in on this thing that I don't know about and take some time to study. Because I kid you not, if it happened once, it'll happen again. So again, the stock market has cycles just like seasons. They're going to come back. So the best thing to do, typically I have like a 5-year approach. So, and that's what I do to prevent myself from being over leveraged and, because I don't want to get too sucked into like the catalyst and stuff like that for whatever position I'm in and say, oh my God, this is going to do this and this is going to go this much and it's going to appreciate. And then, it's one of the lessons I learned. That's why you always leave room to average down. But you're absolutely correct. 2 to 3 year hold mindset, and that's going to be your biggest buffer for not being over leveraged. So, because if you put money in there with the intentions of leaving it for 2 to 3 years, that means that you are not going to need it in 6 months. People get into trouble when they invest all their money because a catalyst is coming up and like, oh my God, if I put all of my money in here and it moons next month, I'll make 10x. Then something happens or it goes the opposite way. And then now you're on YouTube and on Reddit and stuff telling everybody it's a scam. These are the issues here. I subscribed to him the moment he said Goku Super Saiyan God, Kaioken times 20. Yeah, I remember that. I appreciate you. Thank you. Already a year in, buddy. Hell with that. 1/10 of a penny big drop. Yeah, they'll start flashing red and all this other kind of stuff when it drops. So no big deal. No big deal. Not yet. I don't really pay attention. I'm okay with the fluctuations. I only start looking at catalysts and what's going on when we start breaking through resistance levels. That's what people ask me, is Dogecoin okay? And I was like, no. Dogecoin's fine. I gave you the resistance levels last year. And 12/6, pump the brakes probably around like 8/10. I gave you the resistance levels. As long as we hit resistance levels that we are supposed to, just because of catalyst, we kind of expect it. And as long as we get bounces off of those resistance levels, that is a healthy sign. Now, when you start blowing through, like if Dogecoin would have, the market would have went down and Dogecoin would have blew through 12, like down to like 8 or something like that, that's alarming. Those are like full retraced type of threats there. That's alarming. But when you're hitting resistance levels and bouncing, that's what you're supposed to do. I'm okay with that. I am okay with that all day long. So let's see. Now looking at Cliff Inu. Yeah, I looked at with Cliff Inu. It's not, because I think you're talking about the one that's modeled after like Clifford, the big red dog, if I'm not mistaken. You can correct me if it's not. Yeah, I looked at that like a few weeks ago. It's not something I would touch. At least not as of right now. I know they're building some stuff around it, but a lot of these coins, especially where we're going right now, you want to be, because last year you can invest in almost anything and you could make money. The market was appreciating greatly. The market what's looming over, and I think a lot of people in the market haven't experienced a bear market or even been in a market during like a recession. But when you look at the numbers and you position yourself and say that, okay, what if there's going to be a tightening of money? You have to be more strategic about where you're putting your money. That's what the institutions know that. That's why there's this threat of this money vacuuming out of crypto, because the reason that they're going to vacuum the money out because there's tightening money is because they're going to rebalance their portfolios into something that they deem safer until this thing bottoms out. So if they're doing that, then you have to say, okay, am I in a position now? Are my positions Am I long in these positions to hold and wait till they bottom out so I can increase my position, or do I need to be rebalancing? So when you have these new, because I know these new coins are going to be popping up all over the place like that, and some of them may even pump, but you got to keep in mind a lot of these coins are not going to exist after this extraction of money is being pulled out. So just be careful with a lot of these coins and stuff that are coming out. But if that's the coin, the Clippy, you can correct me if I'm wrong. But if that's the one I'm thinking of, I wouldn't touch it. I've made like 21 USD with like 500 USD so far since December. Dogecoin looks to me like trash, a pump and dump. Explain that, because again, if you look at the charts here and even compare them, do overlays with additional charts, it's not much different from what's overall going on in the market. So I'm very confused as to how it looks like a pump and dump. Because I can show you some pump and dumps, but Doge, as far as we're holding its resistance line for weeks, months at a time, having its retracements and shorts literally having to come in to kill the momentum. I'm very curious to know how you came to the conclusion of a pump and dump. Let's see, can you think Doge can eventually hit $5? With mass adoption, and again, the overall market expansion in general, and that strain being put on the market supply, because it's going to take a huge market cap to make that possible. So that's not going to happen without overall market expansion for the crypto market, which I do believe is going to happen. I think that crypto is going to be a $5-10 trillion market and growing. But that's going to happen with Dogecoin becoming being mass adapted. So this is where you're going to start coming into like your major retailers, and Dogecoin is going to be, that's at a point where Doge will be being used for like everyday type of transactions. So that's like a Walmart or Amazon, stuff like that. And that's simply just buying pressure, right? And you're measuring against dollars. And at some point, I don't have the chart, but Doge is going to have lower inflation than the dollar anyway. Because if the Feds don't get inflation under control, which is what they're trying to do this year, $5 Dogecoin will come a lot sooner than you think. Because the dollar, as inflation goes up, the dollar is going this way. So, so $5 Dogecoin can happen a lot sooner than you think. It might not mean anything just because the dollar is going the other way lightning fast, but we have to kind of keep that in mind. But it's possible, yeah, absolutely. But it's not without massive adaptation. So and market expansion. But we're on pace for both of those. So again, I'm very optimistic about the future. So, but yeah, if Dogecoin becomes like the digital dollar, basically, like Bitcoin is like the digital gold, if that's the niche that we push for and it's accepted in and widely used, then we're going to see great appreciation from where we are now. But I just want to be clear that comes with market expansion and mass adoption, not just buying and holding. Like, it's because I know a lot of YouTubers and stuff like that try and present Dogecoin that way. That's not how it works. Dogecoin is meant to be used as a currency. Utility and expansion are the only ways that's going to even have a sustainable price like that and even hit those goals. Buying and holding is simply not going to work. So just so we're clear on that, but yes, it's absolutely possible. Let's see. I'm chilling in the cut while waiting for the bull run. Also, I'm educating myself through your videos. You're the best. Thanks. Absolutely. Yeah. Did you get your shirt? Let me know. I emailed you and sent out like the tracking number and stuff. Let's see. I left so much money on the table. It was ridiculous. I understand. Let me scroll up here. I'm like way behind here. Thanks for answering. That makes sense. No problem. Have you heard about Dogecoin social media? They're talking about developing. I haven't. Like a Dogecoin social expand on. Well, I guess you can expand on that. I'm not sure what you're talking about. Let's see. We're off to the races now. We're in for one more dip before the upswing. Oh, are we off to the races now, or are we in for one more dip before the upswing? We're not going to know, because I was hoping that they would give an idea. Maybe I was being overly optimistic for the Fed meeting, but I was hoping they would give an idea of at least what direction the they were heading. But since Jerome pretty much came out and lied and said he has no idea and they haven't talked about the ranges, we're forced to kind of wait here until around March. This will kind of, and pretty much the whole year, right? I believe we'll get spikes and like little mini runs and stuff like that based off of our catalyst. But if that type of, because if the money is fleeing from the market to be rebalanced, if we say we're going to moon or have that type of aggressive bull run in a market that is bearish, that means that 100% of the money would not 100%, but most of the money would come from retail investors, right? So it's hard to say it's going to be like one more dip, because if the Feds come out in March and again they're like, hey, because the numbers came out for December and they're like, hey, this is the worst inflation. No, the numbers came out for December. That was the worst inflation month over month than last year. And then the numbers for 2021 is the worst inflation we've had in 39 years. So I don't know if we're going to have more than one dip. It really just depends on how aggressive the Feds are going to be trying to get inflation under control, because they can come out and put massive fear into the market and say, hey, look, inflation is running rampant. We're raising rates crazy. We got to get this under control. And depending on how aggressive they are, that's going to determine what kind of dip. So really the rest of like the stock market, the crypto market, the whole year is going to be riding on this, because, and don't let anyone fool you, like on, YouTube or any of these blogs and stuff like that, to convince you that if the institutions pull the money out, that retail has like $2 trillion to keep the stock market, not even the stock market, just the crypto market afloat. I can assure you that people do not have an extra $2 trillion to keep the crypto market afloat. If they pull the money out, a lot of those lower support levels are going to be tested. That's a mathematical certainty. Same thing in the stock market. So as far as are we going to have another dip or how aggressive? It just depends on this, how aggressive they're going to be with the inflation, because they're really set on not pumping the market up. And there's another thing we have to kind of keep in mind is a lot of the prices that we saw last year are not necessarily the real prices, right? A lot of the prices that we saw with the institutional money coming in and them being so comfortable, there's $120 billion a month going into the market. So a lot of these numbers have been overshot. So the question is, what we all have to ask ourselves is, yeah, we're in great positions. We believe that our coins, our stocks have utility, competitive advantage, vision, leadership. All that's great things that will survive the bear market. But you have to ask yourself, what is the real question is, what does the stock market look like without $120 billion a month flowing into it? What does it look like when that comfort level isn't there? What does the crypto market look like without that comfort level there, without all that money flowing in there and this cheap money flowing through the market, the 0% interest and stuff like that? What does it look like? Would Bitcoin have hit $60,000 last year if they $120 billion a month and basically free money wasn't flowing into the market? Would it have appreciated as much? Not saying it wouldn't have appreciated, but would it have appreciated as much? Are those the real numbers? And then are we going to have to compare the current prices to those inflated numbers? So are we going to compare cheap money prices, like a $60,000 Bitcoin and stuff like that, to a more normal period of money and saying, hey, how come it's not appreciating? We have to understand we've been avoiding corrections and pretty much a recession really from like the last 10 years, probably 10 years plus. After the 2008 crash or whatnot, the solution was what? Too big to fail, sending out money, right? And we've been on this highway to heaven ever since. And so the money has to stop at some point. And now and it's really not even that they want to, at least not this aggressively, but inflation is like, okay, if you don't stop this, then, this money is going to have to be absorbed into the economy. And then we're going to see, you think things got expensive in the last year, it's going to be a hell of a lot more expensive. So to time it and say we're going to have one dip before the upswing, it's really a lot of variables in that. I wish I had something more concrete. I wish Jerome would have given me something more to work with, but he has not. So we're lingering in, I guess, in the middle until March. So at that point, I'll report and look at the numbers, and I'll, as I always do, I'll report back to you guys my findings, and we'll kind of go from there. I haven't yet, but definitely if you haven't, please like the video, subscribe to the channel if you want to hear more from me. And I've been going on my rampage here, but I wanted to make sure I was giving you guys really in-depth answers to your questions. Sorry, my chat just refreshed here. Beware of the new Grimace coin rug pull incoming, for my opinion. Yeah, I'm almost I'm almost certain that's going to be some crap there. I wouldn't even touch that. Yeah, you're absolutely right. I hope, I really, as a matter of fact, there's what, 150 of you roughly on here. I hope none of you are in Grimace coin. I pray you're not. Remember, I gave you the catalyst for a successful coin longevity wise. So, I just don't, if you're in those types of investments, and, because they can appreciate, I want to say that they can't, but the risk you're taking is more than likely not worth the reward. Amazing channel and always very informative. Thank you. No, thank you. I appreciate you. Thank you. Let's see here. Let's see. Unless you absolutely need the fiat right now, then come from selling your Doge. Selling now is an absolute waste of an asset, my personal opinion. Absolutely. Absolutely. Yeah, this is only for like emergencies and stuff like that. It's, and I know psychologically it's easier to buy in bull runs because you have to, it's the lure of an immediate return. But as I'll just say, as the community matures in the market, you'll understand that a lot of the great gains here are going to be from times like this. Because a lot of times, I think a lot of the communities, this is their first time we have this potential bear market. And for those of you that stay in the market and kind of like adapt and work your way through it and learn cycles and stuff like that, you'll be excited when you have bear markets. Like you'll actually pray for them, because you'll, on assets that you didn't know about or that you feel that are overvalued or just not fair market value, when you have the opportunity to get them at great prices, you'll take advantage of it. So, I agree. Like you want to just definitely hold on, especially now, to your assets and be looking to increase. My graph's bullish next few days, then double bottom on BTC. However, BTC moves back to 57K range while alt season begins and rocket. But once BTC hits that range, bear market will start. Okay. Stocks and crypto are all pump and dumps. At some point, if they rise way over fundamental value, it is essentially a pump and dump. However, short interest changes place, so there's that too. Yeah, I mean, technically, that's what goes on in stocks, right? How many stocks or crypto actually rest at fair market value? At some point, it's either overvalued or undervalued, right? Overbought or oversold. And so I'm glad you brought this up. This is really like the secret sauce, or like the foundation of the entire crypto or stock market, right? Your job as an investor is to know which one it is. If you can do that, you will make money. If you can look at a coin, a stock, and say, is this fair market? Is it undervalued, or is it overvalued? If you can distinguish between those three things at any given time, you will make money. That is like the foundation of the overall market. And of course, if it's overvalued, you can get prepared for a dump. If it's undervalued and you're able to get in, you can get prepared for a pump. Like literally, Matt, I'm really glad you brought this up. But yeah, he's right. Like this is in essence, this is like the foundation of the market here. So once you're able to identify those, it would be easier for you to navigate the market. Would the aggressive rates be better? Kind of do it, get it over with. then reset. I kind of feel like yes, but I'm no finance girl. um, the aggressive rate. So technically, when the Fed start putting bonds and mortgage-backed securities and stuff like that in the market, um, especially like 0% interest rates are very close to it. It makes money cheap to borrow. People start borrowing money aggressively, investing in real estate. Margins start going crazy. Everybody's just borrowing money because it's cheap to do so. I'm friends with a lot of realtors here in Atlanta, and they straight up told me like hedge funds have come in and bought entire, especially the ones I guess that are doing like REITs and stuff. They've come in and bought entire subdivisions. Money's cheap. You start, what does that do? It raises the value of the homes next to it. It's just simply rising tides raise all boats, right? And the problem is, especially with when you have things that we use to gauge the economy, right, which is stocks and real estate. So you have a house, you buy a house for 100,000, and it's a competitive market, a buyer's market. Hedge fund comes in and says, I don't want to compete with anybody. I'm going to offer you 20 grand over asking price. Just give me the homes, 20 grand per house. Now everybody has 20,000, boom, of equity. Now, the appraised value of that, you're just basing it up based off of what? The most recently homes sold. So now guess what? Now everybody has $20,000 in equity. And this just keeps laddering up and laddering up and laddering up until, you get yourself into a bubble. Same thing with stock market and with the stock market. You start leveraging and creating margins on account. And now you got all this funny money in the market. People are borrowing shares, leveraging money 2 to 1, 3 to 1, 5 to 1, whatever, and buying these stocks. And then you have appreciation on appreciation on appreciation. And again, we have to see when you start tightening the money, and now you can't borrow money to cover these positions. You can't borrow money to keep these housing prices up. It's more expensive. Banks are going to be more strategic about who they lend to, especially people that has those variable rates on those homes. Like wait until they start tightening. It's going to be foreclosure and short sale heaven. But and in the stock market, it's going to be margin calls everywhere. So when you say get it over with, I guess you can, because it's going to have to happen, right? You can't, if they keep injecting money in there, we'll have runaway inflation and we're going to go into hyperinflation. That's just mathematics. So they're going to have this consolidation, this market reset. It's necessary for the survival of the economy. So I wouldn't say in the big picture, it's better. In the short term, it's going to create like hell. So, but again, if you are in position and you're familiar with cycles, you're going to be able to capitalize off of this. But make no mistake, a lot of people are going to be hurt. And that's always, typically people get kind of baited in during these times here, and they'll have these low rates, variable interest and stuff like that, and you'll end up signing in a bubble. And these typically are the first people to go when these rates start going up and that mortgage starts increasing. Margin calls start happening, money starts going away. A lot of these brokerages may not be here. It just depends on how aggressive they're going to be. So it's definitely a market reset, but it just really depends on your position on it. But everybody's not going to come out of this okay. I'll say that. Who needs a Grimace coin when there's Arab Inu? Here you go. I really hope. I don't even know. I haven't seen Mohammed like anywhere. Like he probably unsubscribed. Like because you guys, Mohammed, if you're in the chat, let me know. I am not responsible for any of these comments. I accepted your apology. What do I think about the future of Anus coin? Is that a real thing? I'm not sure if you're being funny right now, but I haven't looked up an Anus coin. But I haven't looked up, I haven't done any research on that. Microsoft put out a patent to pay in cryptocurrency based on user feedback from wearable devices. Yeah, I think they're going to be mass integration into the the market here. So that's one of the reasons why I believe that Walmart and some of these larger retailers are going to make their moves, even especially if we can get fast food and stuff like that to uh, make a move into the crypto area. Super Doge can go to $10. Look at the supply of Super Doge, just under $1 billion compared to 115 billion. There's a Super Doge now. Okay, was unaware. I think dumb coins are your swing trades, but cryptos are with valid use cases in meta and just regular market should be your long-term plays. I'm at a point where I use stock for swing trading. Yeah, you can. I mean, some people play it that way for sure. Because the volatility there, if you can time one right, even if the coin is basically crap, if you can time it right, you can, catch great appreciation on it. But most of the time, people end up getting killed, or the developers have so many coins that, they're the ones that's going to initiate you getting killed. So if you time it right, you're absolutely right. You can definitely swing it, but you just gotta know what you're doing. I appreciate the insight and perspective, David, in it for the long haul. I appreciate it. That's the way to play. Let's see. Sorry, just refreshing here. Oh, Batman, thank you for becoming a member. I appreciate you. Let's see. Super Saiyan rates. Yeah, it's probably going to be some Super Saiyan rates. Yeah. Those rates, those interest rates are going to be like stronger than Super Saiyan. Yeah, stronger than Superman. Let's see. Not gonna lie, if this bear market does happen and Doge ends up at 6 cents for a minute, I'll definitely be on that ramen noodle diet. We're looking at potential life-changing decisions right now. Yeah, I want Doge at 6, and I want Bitcoin at 20. That's what that's what I want. Again, overall in the market, that means that a lot of bad things are going to happen. But you're absolutely right. I want something that is stupidly oversold. So that's when things become easy money. I want something that it's just ridiculously oversold. Those are the real winners here versus trying to time something or being speculative and stuff like that. Like the things that are obviously oversold, I want to take advantage of it. But that's why last year was such a great year when you have like Delta, the price of Delta being cut in half, a lot of these cruise lines being cut in half, the oil industry, a lot of these stocks being cut in half, these power companies being cut in half. It was an easy time to make money. So that's typically that's the low risk, in my opinion, to take positions. Let's see. Do you think crypto will go down if the interest rates go up? Absolutely, absolutely. Let's see. You charted Cube the other day. It's up $2. Thanks. No problem. No problem. Let's see. Interesting how it's consolidating into such a tight range. Seems like a big move is coming one way or the other. Yeah, you definitely get a breakout. Because I have the, hold on. Oh, not what I wanted to do. No, I wanted to move that. But so I have it. These were my projections here because in order for us to set a new trend, we'd have to pretty much break above this bridge here around like 19 cents. Oh my God, I moved it and now it's messed up. Okay, well, whatever. But I believe that we could come up and test it prior to the Fed's like announcement. So like if AMC does really well and we rock out AMC and they come out and say, oh my God, Dogecoin did 100 million this weekend at the movie theater, and we get like a major pump, we could potentially set a new cycle or at least run up and test this resistance level. But I don't see us breaking out of this until we have some concrete info from the Fed. So at best, like as of right now, at best, especially with shorts piling in, I think at best right now we could go up to like 18. but I don't see us breaking out of this trend until we have some concrete information one way or the other. So, yeah, I definitely believe that we're at mass consolidation, and depending on how hawkish they are, we can have a breakdown or we can come up and test it. But until we get some concrete information, that's where I believe we're at. Let's see. Do you see Bitcoin going to 30K area? Yeah, I mean Bitcoin. So let's take a look here, because I believe if they come out and they be hawkish and they're really hawkish, I think that we can potentially see. That's not the chart I want. So this one. Nope. We can potentially see 20K Bitcoin, and people are like, "Oh my God, that's crazy! Oh my God, where's my chart?" Okay, here we go. So, and if you look at what the trend that we're in now, and we're getting close here, because what we have here is we have Bitcoin's in a downward trend, obviously, and we have lower high after lower high after lower high, right? So let me go to my little tool here, Bitcoin. So down, we have our rally, we come up, touch that 21-day moving average, get slapped back down. We came up here and we went over the 21-day moving average briefly into the 50-day, and then what? Boom, another rejection, back down. Came up here again to the 21-day moving average. What happened? Another lower high, rejection, back down. And here we are right here. Let me go back. Closing in. Oh my God, why can't I navigate today? On the 21-day moving average yet again. Now, the question we have to ask ourselves are we going to get another rejection for the fourth straight time? History says more than likely. But if we continue this downward trajectory, because the problem is right now, we have resistance here, which is why we had a lot of this sideways movement. We had the sideways movement on the upside. Typically, if there's holds, you fill them on the way back down. We had this major slide here, and thank God we're able to catch it. Typically, where we crossed the 21-day and 50-day moving average back in like August, and we were able to catch some momentum here and start building back up. But technically speaking, we're in gap up territory, and as you guys know, gaps typically fill themselves. So that would put this next breakdown, if this does what it has been doing, and we get this next breakdown, where is the support? That's right here at around 29.75, 30,000. That's where the next level of support is. So it is not as crazy as people seem to say that, oh, well, our next breakdown can lead us to, and I won't zoom out further and show you where the next support is and why we can go there. I won't get into that. But that's not as crazy as it may seem that it can go that low. So just keep that in mind. Keep that in mind. Let's see. Off the wall. But what are your thoughts on housing prices this year? Major correction coming, just like the stock market. Major correction coming. That's not even a thing. It's obvious at this point. So those interest rates are going to be tightened as well. Money is going to become more harder to borrow. These prices aren't going to be able to sustain themselves. Feds are back talking 4-time rate hikes to 3x. Olympics start in a week. Russia and Ukraine will remain calm during that time. Everything will run out till the end of February. Yeah, no, I'm expecting, I mentioned this last night. There's a lot of catalysts that can give us a bounce in the meantime. I don't necessarily believe it's going to change the overall trajectory of where we're going, but there's a lot of catalysts that can give us a bounce in the meantime. Like the ones you named, income tax, child tax credit, that can give us a bounce. The people that did tax loss harvesting in December, their 30-day wash rule effect is coming up, so they can make a lot of re-entries back into markets in some of the positions that they sold off. So I do believe short term, there are a lot of catalysts here that can give us a bounce, but I just don't believe it's going to be enough to kind of cushion us from the direction that we're going. But yeah, you're absolutely right. We can definitely see some run-ups here. Going viral. Thank you for super chat. I appreciate you. I'm holding my Doge. I believe in it. That's the way to go. Where's the Robinhood wallets? They're rolling them out. They're rolling them out, not to the degree that they said they would, or to the magnitude, but they're coming. They're coming. They're kind of they're not backpedaling just yet, but they're coming. They're coming. They're coming. When did you buy Doge? How much are you holding now? Great question. So I put my first entry in the community section on my page. My 1 year anniversary was yesterday for Dogecoin. I made my first entry at around like 2 cents, right? And as far as for how much, I'll just say it's over, as far as Doge count, it's over 6 figures. So I'll just say that. But my first entry is actually posted in the community section on my YouTube channel. So, and my 1 year anniversary was yesterday. Let's see. If Bitcoin holds high 37, low 38s, would that help get more hedge funds and looking more stable than stocks? Well, I mean, if you look at the reason, because technically speaking, if you look at the comparison between, like, Dogecoin has a high retail to institutional money as far as for evaluation. Bitcoin has a high institutional money to retail evaluation. So I don't believe they'll look at Bitcoin as like a safe haven when they're the ones that's propping it up. So you have to look at who holds the actual like coin. Like, it's like, you know, they'll look at Apple and say that, okay, well, it's going to be, you know, a long term, and obviously the evaluation's there. So you can kind of use the retail as like a floor, which often happens. And I believe that'll happen kind of like in Bitcoin as well, because they'll know that people will just become more bullish on Bitcoin, or like the example Apple I gave you. You can kind of, if you need to rebalance, you can kind of take profit. And because of the retail that is in the current coin that believe in it long term, they're not going to sell. And plus the attraction of the new people is kind of going to create a concrete floor so that they can kind of come out, rebalance themselves and kind of make another entry. But I don't think that it'll be viewed as more stable than stocks. As of right now, I still think the old sentiment is still true, that crypto is more risky than stocks, and it's certainly more volatile. So I think that I don't think that sentiment has changed just yet. So let's see here. David, thanks for not pumping fake coins like other YouTubers have done recently. Yeah. Yeah, no, I try everything that I put on my channel, whether it be research or TA, and, you know, any of my charts, prediction stuff, I make sure that I try and have a valid reason for saying everything that I say on my channel, so that 5 years from now, I'm going to be able to answer for everything that I've said. A lot of these YouTubers are not going to be around in like 5 years, probably because of like lawsuits and other reasons, but I try and be careful what I put out there without having valid reasons to do so. So, do you think Doge can be the number 2 or number 3 spot on coin market cap? Doge can be, I'd say, if we have mass utility, and like again with the expansion in Doge becomes like literally like the internet currency, I believe we probably can crack like top 5. I believe that, but it's hard to compete, especially with some of the coins that have a lower minting rate. But we can definitely become a top 5 again if it becomes like the digital dollar and people are using it for everyday purposes and even storing some like in their wallets, and that strain on the actual supply being minted is there. It can certainly have the evaluation of maybe like top 5 in the digital dollar aspect, but top 2 or 3, because I do believe Ethereum will probably not be number 2 always, but I believe it'll be number 10 long term. But I do believe Cardano and some other ones are going to appreciate. So yeah, I'll say probably not 2 or 3, but number 5. I believe we can crack like top 5. Let's see. As a New Yorker, the only reason I used Robinhood a year ago is because they allowed us to buy Doge and others wouldn't. Top of your head, do you know if the Coinbase, etc., accepts New York on their platforms yet? I have no idea. I have no idea. I'm sorry. I wish I could be able to help. So China, Russia, India send out statements about considering regulations on crypto market dips. Then they send out a revision. USA is doing the same. Is this just market manipulation by bigwigs? For the most part, but I do believe that market regulation is going to come. Right. I'm a firm believer that if the market keeps expanding like the way it is, and we keep saying things like digital dollar and mass utility and stuff like that, that's basically a threat on the dollar and a threat to the Fed's control over the monetary policies and stuff that we use. They don't like that. So I do believe regulation is coming. I think that we can ultimately see some regulations, but it's kind of up to us to make sure that we don't turn the crypto market into a carbon copy of the stock market, where we have just hedge funds and whales running through it rampantly, and we're just getting screwed and used and abused. So I think that it's a real thing that's coming. I'll be releasing some research, pretty much an update to a video I did about 8-9 months ago on regulations and feds and stuff like that in crypto. So that video should be out within like the next 48 hours, 72 hours. So, but yeah, I do believe it's a real thing. Probably market manipulation to a degree, but I believe it's something that they're really looking into. And I believe it's something we should kind of like brace ourselves for. You think of Litecoin? I like Litecoin. I actually have some. I don't know if long term it's going to be a major player, but I actually have some. I bought some a while back. But long term wise, it's going to need to, because the thing about crypto, it's going to need to expand or come up with some like type of competitive advantage and stuff like that. Because the thing about crypto is the market is expanding and changing globally, which is why I'm still bullish on Dogecoin, is because we're pushing for these catalysts and we have all these new marketing areas and stuff coming up like Doge and stuff like that. Because in crypto, if you do not evolve, you're going to get left behind, right? The market is changing and adapting. So we're going to have to make sure that these coins are your coins that you're invested in. If you're long term, you're going to have to make sure that, yeah, it's great to hold and be long term, but is your coin going to maintain that competitive advantage and grow and adapt with the market? Because crypto is literally like full speed ahead right now. So, Litecoin is going to have to start doing some new tricks here if it's going to be competitive. Let's see. What's your subscription goal by the end of the year? Love your content. Wow. I do believe, well, right now, my short-term goal right now is like 40,000. By the end of the year, I mean, I'd like to hit maybe like 100, but I mean, that's not, because at the end of the day, because I'm not going to put out like crap to get more attention, because I know technically how algorithms and all that kind of stuff works and how the channel gets shared. So if that means I have slower growth, then so be it. But I'll say my short-term goal is 40,000. Long-term objective would be 100. So if this year goes like great, stuff like that, I like to see we finish the year with like 100 plus. So very unique question. All right, hold on, my chat just reloaded here. I hit the like number 103. I appreciate you. Thanks for not being a sellout like the rest. No problem. I will try and present to you what I have value in and what I believe has value. There's one reason why I do like TA like on like other coins, and I talk about like Bitcoin and stuff like that, because I don't want to, because I have options and I do stocks and stuff like that, especially if you look at some of my older videos. So I don't want to create the illusion that, yeah, if you just have if you invest in this here and put all your money here, this will solve all of your problems, because it's not the exact approach that I'm taking. So I own other positions. Abraham missed AMC at $14 2 days ago, or now it's at 15. A Tesla sells Dogecoin with AMC pump. Well, I think the catalyst going around AMC is unrelated to Tesla or Dogecoin. So, and AMC, with it being the largest movie chain in the world and doing the numbers that it has been, AMC is approaching oversold territory anyway. So I think that AMC is going to have a rise as well. And if you look at some of the reports, you'll see that a lot of these hedge funds have been taking large positions in AMC. Even like a few weeks ago, you've seen that a couple weeks ago, like BlackRock purchased almost 10 million shares. BlackRock is the largest hedge fund in the world. It is, when you see hedge funds like this, despite what you hear or see that's being portrayed, you have to look at what people are doing to see if it matches. So if articles are coming out saying, oh my God, it's dead, or it's not going to work, but then you see them increasing their positions, you know that a hedge fund has one job, and that is to make money. So if they're coming in even at higher prices than 14 to 15, they're expecting this to rally at some point. So that's all that's most of the confirmation that I need that this is going to have a pump. But I do believe that these are great prices. So I think that AMC will have a rally, and that especially at these prices, you'll have opportunity to make really great money. It depends on which account. I have AMC on a few of my accounts, but if it goes below my current DCA, my lowest DCA on AMC is like $10.80, I want to say. So if it goes below that, then I'll actually be in the red on all of my accounts. My more aggressive account that I was buying in the 40s or the 50s, I'm in the red. I want to say maybe, I'm still bullish on AMC, but I want to say I'm in the red maybe like 12,000, I want to say. So don't feel bad, but if you're bullish on AMC, whether you're talking about squeeze purposes or just the health of the company, you may there's an opportunity here, I believe, that for it to appreciate. So hope that helps. Do you have a stock portfolio? Absolutely. Yeah, it's one of the things I want to talk about here on the channel, because I know most of the time I do videos like on Dogecoin and stuff like that, and I want to kind of do like a general encompass, so that, because I know most people on my channel, they are here for Dogecoin, so they're simply just watching like crypto cycles, and then because there's money to be made in the markets, like overall, because I have options on like Apple and Tesla options, and they have all made money within the last few months. Like when the market went down, I had puts and inverse, SQQ and stuff like that. So it's like, it's things that I do that I don't talk about on the channel, but I still feel that people could benefit from them and make money. So I may incorporate some of that on the channel, just to give people an opportunity to always make money despite what's going on. Because either way, like whether we go into a bear market or we resume the bull run and everything goes to the moon, my goal is to make money anyway, regardless of what type of market. I don't care if we're going up or down, there's opportunities to make money. So the question is, do you know how? So I do have a stock portfolio, and I may start talking about that a little more on the channel here, just to kind of broaden people's like perspective. I'll always cover Dogecoin, don't get me wrong, but I think I'll start going over some of those things. Not too late, but here, welcome. Dollar DCA, that's your dollar cost average. So if you buy like one at 10, one at 5, one at 1, it's going to be like pretty much like, consider it like your median. Oh my God. But yeah, consider it like your median of your averages of your entry points into a particular stock or crypto, right? It's your average, and that's what's going to use. That's what's going to be used to determine if you're in the profit or in the red. Excuse me. Oh, that would be great. Okay, well, I have one person that supports that decision. I appreciate you. It's a thumbs up, simple click, please. Absolutely, yeah, please. If you haven't yet, like the video and consider subscribing to the channel. So let's see, we're at 120. I'll do 10 more minutes. If you guys still have questions and stuff like that, you want to chat, and then I will conclude this video. I have some research I have to do tonight for tomorrow and Monday. Any good stocks to put a little money into as a new investor? As a long-term hold. Long-term, I'll say that long-term, like the easiest ones, it's going to be, because you don't need anyone to tell you where the market dominance is going to come from. Like, I think if you look at my older videos from like over a year ago, I've been bullish on Apple for a very long time. I'm talking to you on my Mac. I have had every iPhone since like the 3G. Apple, I think Apple, even though it's the world's first $3 trillion company, I think Apple will be the first $10 trillion company. Apple is going to do numbers. So like, I like Apple. Microsoft is consistent. Like, you can't complain about Microsoft as well. Amazon will be great. I do believe that Amazon at some point will start offering dividends. So it's long-term holds. You know, if you could buy a piece of those, I'd say go for it. Now, granted, you're not going to get rich from buying those unless you have a lot of capital. So you probably, if you're looking for gains and appreciation for short term, you can certainly divide that up. I won't get into that now, but long-term holds, those will be some great staples as far as for stocks. Like, I believe you can't go wrong with those. Thumbs up. I appreciate you. Thank you again. No problem. No problem. Once US launches its own digital currency, why would we need Doge or any other similar coins? Excellent, excellent, excellent question. Something I'm discussing in my a video I'm going to be releasing soon. So the purpose of this mass expansion that we have as far as pretty much being like decentralized and getting it away from government control, right? So because technically speaking, inflation and a lot of the, you know, if you can look back and say that, oh, okay, these currency crunches, credit crunches and stuff like that, real estate crashes, dot-com bubbles and stuff like that, who gets screwed in those, and who gets, you know, who has the, I won't say that they'll have no chance of losing money, but typically if there were to be a bailout or a cushion for those mistakes, who gets those, right? I think that having something that is decentralized is an opportunity to break away from like the status quo. Now, I do believe that regardless if they come out with a digital currency, I do believe hedge funds are going to run into the crypto market. I do believe that if we're not careful, they'll try and mirror the stock market. But I think that as far as for having something interchangeable globally and stuff like that, and being able to own it privately, something similar to gold but less scrutinized, I think that it would just have that competitive advantage. But it's one of the things that it's sensitive, because I know that historically it's not allowed, right? Whether that be gold, or since the last time we bartered, really, the government or your current government has always had extreme involvement in your medium of exchange. So, but I do expect the U.S. to have some type of digital currency. Historically they have 100% involvement. Like, so we have our gold and silver coins minted by the U.S. Mint. You know, because that was technically before crypto, that was the other form of money that was internationally recognized, and now we have crypto. So I have no reason to believe that they won't be involved in there. But I think for the same reasons people still have gold and silver, is kind of like a hedge against the dollar, because it's more absolute. I think people will have digital currency as well because the dollar is going to be whatever they make it. If they want to tighten it, they can. If they want to loosen it, they can. If they want to make more, they can. So gold is more certain. It's absolute. There's a finite amount. Dogecoin is more certain. You're not going to, that 10,000 is 10,000. That's what it is. That 10,000 that's getting minted, that's 10,000 that's going to get minted. Like, it's not like well, we need some more Doge. For the next 6 months, let's turn that, that 10,000 a minute up to 50,000. We need a little more, kind of loosen up the money here and make cheaper Doge. Like, no, it is what it is. And I think that's what's going to keep it attractive in the long term. Let's see. Elon said Dogecoin is better than BTC right now, but it's not ideal. Yeah, I heard something like that. Do you think we will go into a crypto winter? I don't think we'll go into a crypto winter. I think that we'll have a consolidation in the crypto market, but I don't think we'll go into a crypto winter. I think that even now, most people, because they see the opportunity in crypto, they will, even what we saw last year with the short and bear market, I think that most of the whales and institutions, they're not going to lose control of these assets for retail by giving retail 2 or 3 years to buy into them at historic lows. I think that will be foolish of them, and I don't think they'll let that happen. I think we'll have a sell-off for sure, but I don't think we're going to go into a crypto winter. I don't even know if we'll have another one at this point. I think crypto is way too popular now for us to have another winter. That's just my opinion. I have nothing to factual to back that up on. That's just what my opinion is. But I think crypto has reached a point of popularity that it's not going to consolidate to like 90% and stay there for 2 years. I don't see it. I don't see it. So thank you. Just need a piggy bank to put extra money in that isn't Doge. So thank you again. No problem. Netflix will be a good one. They will invest heavily for customer acquisition and retention. Yeah. Netflix, they're innovative enough. They should be able to pivot and regain because, you have new competitors coming in there. And that's one of the issues when you have other competitors coming into the market, you're going to have to split up that market share. So, so you have like your Disney Plus and all that kind of stuff in there. It's easy to dominate when you're the big fish in there, but when you have other dominant players coming in there and you got to split up that market share, you're going to have to start distinguishing yourself to make sure you maintain that competitive advantage. But I think Netflix they know what happened to Blockbuster, so I think hopefully they're intelligent enough to pivot and like you said, work on retention and acquisition. Let's see. Elon should put Burger King against McDonald's and say he will eat a Whopper on TV that makes them compete. That'll be smart. That will be smart. Let's see. Will Bitcoin reach 100K this year? I doubt it. I strongly doubt it. I do believe that Bitcoin will see 6 figures at some point. This year, I doubt it heavily. But I do believe Bitcoin will hit 6 figures. Absolutely. Let's see. The winters of the old days for the Bitcoins will not last as long. Old days that lasted for years, now we're limited to months. I agree with that completely. That's pretty much what exactly what I said. I agree with that completely. Way too popular now. Way too popular. In the chat, what I missed? A lot. We went over a lot. Let's see. Yep, and I hope that all of you receive some form of value tonight. If you haven't yet, like the video so that even when we all get off of this chat, YouTube will share it with additional people. And if you haven't yet, subscribe to the channel. We are pretty much going to give people the opportunity here. Really just grow with the channel, and so that we can learn the basics together and not just depend purely just off of like opium and stuff like that. So I think that it will benefit from us greatly. So with that being said, I'm going to conclude it here for tonight. If you have any questions, as always, just hit me up in the comment section. I'll go through them later tonight and get to as many of them as possible, and in the community section as well. So with that being said, I appreciate all of you for being on for this hour and a half. Thank you and good night.